Hi, I'm Tom Lydon, editor of ETF Trends, here in Chicago at the Morningstar ETF Conference. And I'm here with Bill Belden, head of ETF Business Development at Guggenheim Investments. It's great to see you, Bill.
Tom, as always, great to be with you.
So let's talk interest rates. A lot of advisors are kind of back on their heels right now saying, okay, the Fed's eventually going to pull the trigger. You guys do a lot on the active fixed income side. What are you telling advisors now?
Yeah, great question. So we talk to advisors quite a bit about preparing for what's coming up and facing the challenges that they are presented with within the fixed income marketplace, which is we're in a low interest rate environment, heading higher at some point in time. How do you prepare client portfolios for that particular type of environment? So we're talking to them about the benefits of active fixed income, and particularly on the shorter end of the duration curve. So we have an ETF, GSY, our Enhanced Short Duration ETF, that delivers a short duration profile with a very attractive yield. So when you break that down into what is the yield that you're getting per unit of duration, it's a great analysis or a ratio to take a look at, are you getting paid for the risk that you're taking in your portfolio?
Yeah.
We're seeing a lot of success with that with advisors who are really trying to capture what the fixed income market has available to them. And the shorter duration exposure actually helps mitigate what might be a rising interest rate environment that we're on the cusp of facing.
So we understand it. GSY is the ticker symbol. Short duration, what's the duration of the index right now?
0.3 years. It's an active strategy. We keep it, it's less than a year by mandate, and we keep it closer to about 0.3 years right now.
Right.
And in exchange for about a 1.3% yield, that's a pretty attractive trade-off.
Right. I mean, considering what the 10-year is paying right now.
Exactly.
And the risk in the 10-year alone.
Exactly. And so investment grade exposure, in really short duration, attractive yield, it's a nice trade-off.
Actively managed, fully transparent, and you can really go across the whole fixed income gamut within that portfolio.
Exactly.
Correct?
It delivers what the core competency of Guggenheim has been, which is the active fixed income space.
Yeah, and really that's what most people don't understand. Guggenheim's been active in the fixed income space for a long, long time. They've got a huge team that's not only managing these ETFs, but separate managed accounts in the billions of dollars.
Exactly. We've built our legacy on active fixed income. We're having great success right now in our fixed income mutual fund family. We have it in GSY, and we're looking to build upon that in terms of our ETF business development going forward.
Yeah. So it's also been considered in many cases as a money market alternative, because money markets aren't paying anything, and still in these rising rate environments, there's still the thought of what about money market risk?
Right. We talk about positioning it as a strategic cash alternative, right? So money markets have an element to them that compare favorably with a stable NAV. This has a price that moves ever so subtly, but if you have a strategic cash allocation or you're transitioning investments, GSY or Enhanced Short Duration is a great solution.
Great. Excellent point. We hadn't talked about that yet today.
Right.
Really appreciate it, Bill. Great seeing you.
Tom, thank you.
Thank you.